Hey, Kevin Green is with me, and he's taking a look and combing through all the opening bell numbers as we do see energy and utilities with some up arrows here this morning. Good morning, Kevin Green. Some of your thoughts on this morning's action?
Yeah, you've seen a little bit of a pullback here, Nicole, especially when you're looking at the Mag 7 names, NVIDIA down about 2.2%. It's kind of interesting. There was some commentary coming from Constellation Energy, their CEO, kind of mentioned the fact that the U.S. electricity demand picture that's being kind of talked about in the markets because of AI may be a little bit overstated here. And you did see a couple of these AI names actually selling off. But if you're looking at the S&P 500, we're hitting a critical area here for us to be able to try to bounce off of this 5,600 level. We've been talking about it over the last couple of trading sessions here, and you want to see some buyers really trying to step in and really hold that line. You really don't want to see a break below that, especially if you're looking at the daily chart here, because that gets us fairly close to that 50-day moving average, which sits around 55.67 here. I mean, the trajectory right now is still, for the most part, to the upside. We are seeing a little bit of a consolidation, which is normal when you're looking at the technicals right now, and market breadth is starting to subside here a little bit. If we're looking at it on an intraday basis, once again, the 5,600 level is going to be a key area of support for us to be able to try to bounce off of here. I'm looking at that next level to the upside as an area of resistance at around 56.30, the same kind of level that we saw as an area of support yesterday. And if we have any type of other, further breakout to the upside here, 56.80, which has been once again an area of resistance, 56.80, 5700 here. Overall, you do need to have some of the mega cap names really try to respond, maybe see a little bit of a bottom here so we can try to bounce a little bit higher. But you're maybe seeing a little bit of a selling of the market, maybe some profit taking ahead of the FOMC meeting, which obviously everybody's going to be focusing on here. It could be a pretty big wild card for the market overall.
Yeah, NVIDIA, May 28th, we'll watch for that. I was seeing some notes from Bank of America analysts this morning. They talked about CapEx spending, which is slated to decelerate in 2025. But the hyperscalers are still expected to grow CapEx year over year, 35%, outpacing some of the forecasts. They did talk about some positive signs. As you mentioned, the Mag 7 names like Microsoft, Meta, and Amazon would continue to spend heavily on artificial intelligence infrastructure. That includes the NVIDIA chips. You did have the MAGS chart, I believe you were going to take a look at, and then gold.
Yeah, definitely. So about maybe 2 weeks ago, 3 weeks ago, we looked at this MAGS chart here. Actually, about 2 weeks ago, we had this bullish engulfing candle that took place. We had some follow through, especially when you're looking at last week. But now we're getting close to an area of resistance, that $48.85 level here. If you're looking at the RSI, it has not broken the downtrend as of yet. So you still have to be really cautious when it comes to MAG 7. But you do have the MACD on the weekly chart starting to base out, and looks like it really wants to attempt a bullish cross with that 12-week EMA crossing above the 26 EMA. But this just kind of signifies that the follow through from the bullish engulfing candle did actually happen here. But we're getting fairly close, and it's going to be a pretty decent area of resistance for the mags. But if we're able to kind of break through on some really decent news, especially when you're looking at the earnings front and some of the news front here, maybe we do get out of this formation or potential formation of this head and shoulders pattern, which right now you can make the case that we are forming the right shoulder here of that pattern. Now, that doesn't mean that it has to go down, but it does mean that a lot of technicians will be looking at it, and it could be an area of shorting this name. If you're kind of looking at gold, once again, a chart that we talked about last week, going back, revisiting that 20-day moving average was an area of support, looking for a little bit of a bounce, and that's exactly what we saw if you're looking at that daily chart here, where you did see a bounce to that upside here. What you want to kind of focus on when it comes to gold is going to be that 34.40 or 34.40 area. That's going to be a key area. Do we actually have a blow off top and maybe a double topping pattern, or was this a reset and then we are going to push to new all-time highs? I think that remains to be seen. But an interesting dynamic that we did have gold kind of retracing a little bit, catching a little bit of buyers in here in the market, while we are still seeing equities for the most part faring pretty well. So that risk off trade, when you're looking at gold as that safe haven asset, has not completely broken down yet. Maybe has just taken a little bit of a breather and now trying to retest these all-time highs probably in the next couple of days.
Yeah, okay. So as we look at gold here and we think about these commodities, gold's high was 3,500. Any thoughts on, when it gets there, or what drivers or catalysts we're watching when you look at this chart?
Yeah, I think you're still looking at the uncertainty when it comes to tariff policy, as well as demand from Federal Reserve banks continuing to buy gold. And that has been the strength for this commodity for this cycle. It's not only the speculators, the retail traders, but also when you're looking at the physical demand, this reshuffling. And you just talked about the import export dynamics with Jeffrey Kleintop here. One of the bigger drivers for that import number coming in so aggressively, Nicole, was actually gold. Trillions of dollars were moved in the first quarter. You're still seeing some residual adjustments as far as the physical trade here. You can call it a physical short squeeze in the market where a lot of these futures contracts were actually being exercised, if you will, or delivered, which is kind of unusual when you're looking at the scale of it. That's still actually happening here, not on the bigger scale that we saw back in January, but we are still seeing some pretty strong demand on the physical side. And if that's going to continue, gold is probably still going to be able to hold up here for now. The bright side here, we also see silver catching a little bit of steam here. So the metals across the board, if you're looking at silver, gold, platinum, palladium for today, are catching a little bit of a bid. That's not only maybe risk off, maybe safe haven when you're looking at the precious metals like gold, but also maybe a little bit of an economic growth signal when you're looking at silver and palladium.
Okay, and as you think about crude, after 4-year lows that we saw over the last 24 hours?
Yeah, you're seeing a nice little bounce to the upside, both technical in nature. We had a hammer candle yesterday, maybe some aggressive selling. You may be seeing some short covering there, but you do have some geopolitical risk that is starting to maybe impact this market. A couple of things that are on the radar right now. We do know that in Yemen yesterday, we did see an oil port actually getting hit by some attacks from Israel, and that's one thing to kind of keep in mind. Now, Yemen is not a huge exporter when it comes to oil, but just the fact that oil infrastructure is being targeted in the Middle East will put a little bit of a bid when it comes to crude oil. And then also just be mindful, Diamondback Energy reported earnings as well, and they are now providing their guidance moving forward for Q2. And it looks like their production guidance is coming down a tad bit. And if they're going to reduce production, that also could reduce rigs. When you're looking at the oil rigs here in the United States, that could tighten supply and that could push prices higher. I think both of those dynamics is the reason why we are seeing crude push higher here today, up around 3.6%. Let's see what's going to happen at that $60 level. That's going to really be that retracement from high to low that we've seen over the last 2 weeks. And let's see how that actually does resolve. Do you get shorts coming back in, or do we actually see value being traded in crude oil because of those dynamics, not only geopolitical, but also from these earnings announcements coming from energy companies that are saying, hey, with the dramatic drop, we might actually also have to pull back our production in order for us to keep margins together. And if that's going to be that narrative, it might be very hard for us to try to break down that $55 level outside of maybe OPEC continuing to try to push production higher to flood the market, let's say.
Kevin Green, great to see you. Thank you so much. Appreciate it.